Hey, this is Matt from InvestiQuant. Today is Wednesday, October 7th, 2020. Yesterday, we had a wild day in the markets that started off pretty quietly. We gapped up small, and then we filled the gap, consolidated for a while, then started working our way higher before we had some news come out in the afternoon about coronavirus stimulus packages, and the market reacted negatively to that, selling off pretty hard into the afternoon and closing quite weak. And with that, we've got quite a few mixed data points this morning. I am going to show you a bias alert that is potentially going to be in play this morning. So I just hit alerts here and we'll go to bias alerts. These are the IQ alerts. These are intraday trade strategies that we have within the platform that we've recently released, and we've got one that will potentially be signaling today. It's got about a 70% win rate, a decent little strategy here, and that may or may not trigger, but it's potentially in play here this morning. But what I want to show you is the bias alerts, and if I come into here, select the ES, and then narrow it down to up gaps, we've got one that is potentially in play here. And it is based upon a weak close in a bullish environment. I'm just going to click on the view strategy backtest to load it into Discover. And you can see the results and the rules up in the header. The rules are based upon gapping up after a close in the bottom 25% of the daily range. And that has taken place in a bullish environment above a 10, above a 200. Historically, this has 147 samples dating back to 2003. And you can see the equity curve is quite poor. The win rate isn't super weak. It is a little bit weak at 47%, but the poor equity curve is more a result of, just losing more on average than what it wins, and then a slightly lower win rate than 50-50, and that's kind of giving you this march lower in the equity curve. And historically, this has been fairly weak. Now, I'm going to go into symbols and settings. Go ahead and add the other instruments so you can just see what they look like as well. There is one interesting difference here. So let me add all four of these and then hit view results. And here are the results. Again, this is the same setup. I've just added the other instruments to it, and it's based upon going long at the open, which is 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time. And you can see the other results here. We've got the same results for the S&P, the NASDAQ 137 samples, the Dow 150, and the Russell 130 samples. So a pretty common pattern. The NASDAQ has a 54% win rate, so it's stronger than the others. The YM is similar to the S&P, and the Russell is similar to the S&P as well. Both of those around 49% win rates, with average losses bigger than the average wins. But what was interesting is that is certainly not the case in the NASDAQ. If I highlight the NASDAQ here on the equity curve, you can see it is spiking here in recent years. And if I go to the NASDAQ button below to see the results on the button below, you can see the last 5 years or so, this pattern has actually been very strong for the NASDAQ. So almost 69% win rate over the past 45 samples taking place here in the last 5 years. If you look back 10 years, about a 57% win rate. But for whatever reason, the NASDAQ, this pattern has often led to a buying opportunity where the other three instruments have had very similar results and equity curves where they are just kind of marching lower here, and in recent years going lower, whereas the NASDAQ is spiking higher. So I'm not sure what the difference is there, but the markets do have some different characteristics, and the NASDAQ has certainly been stronger with this pattern than with the other instruments. So hopefully you found that helpful. Good luck today, and we will see you next time.